Okay, everybody's got to approve that. So welcome to webinar number 2 on how to win the future, an exploration of, correct me, Alan, an exploration of, I'm not reading it right now.
Yes, sorry. How to win the future, an exploration of the third generation of the internet.
See, I am proof that you don't need to remember and know everything to be involved in this space right then and there. All right. So just before we let everybody come in the door, we're talking about how I don't live from a space, and most Bellwether members can get here, but I don't live from a space of competition. I live from a space of collaboration, cooperation, and community, right? So with that, these webinars are meant to elevate everyone, whether they're curious about the space and whatever facet they're curious about, whether they have a business in this space that they're, want to share with you guys, whatever it may be, everybody is elevated here. There's no competition on it. Nobody's seen in that light. So I want to reiterate too, the fact that this is very new. It's a new frontier, literally. And oh, look at that.
It's Eric.
What's that, Max?
Hi, Eric.
Hey guys.
Hey, Eric.
How you doing?
Doing good.
Good. Sorry to interrupt.
Aaron, you met him in Florida.
Yeah. Met him in Florida. Yeah. I'm like, oh, wait a minute. For a second there, he looked like Greg Norgent. I'm like, wait a minute. Why is Greg there? I'm like, no, that's not Greg. So again, no matter where you're at in understanding this space or interest in this space, I want you guys to open up to just getting at least a general understanding of the entire space. The reason I say that is because no matter what you're doing in life, whether you're looking to invest and have your money make you money, right? Whether you're looking to expand your business or anything in your life / business, it's going to be affected by what's coming with Web3. It will. So you may not see it yet, but one of the things that I have learned basically by being around and learning from very wealthy people is that they're constantly studying and learning. And they're looking for things. And I remember having people ask me a few years ago, like, how do you always get in so early on stuff? It's because I listen and I surround myself with people like on this webinar and the guests we're going to be bringing in. And I surround myself and get to know these people. And part of my due diligence is getting to know these people. And then I trust what they're sharing. So we want to help you guys expand in every way possible and just have a wealth mindset around this. And I'm kind of hitting this a little hard today because today is on cryptocurrencies, tokens and coins, right? So I encourage you, whatever your understanding is or whatever desire or whatever potential shiny object drew you to cryptocurrency, I want you to look at it from a deeper perspective and from a wealth perspective rather than a riches or a scarcity perspective. A lot of people get into crypto or they're drawn to it because they think it's a quick fix. It's a savior to their problems. It's kind of a lottery mindset. Now, can you make fast money? Yeah. Can you do it consistently? Possibly. Right? Is it a probability with most people? Nope. Right? It takes a lot to understand how to trade. So I want you guys to come in and think long-term, no matter where you are in your finances in life. If you're in a short-term, I need, that's not necessarily the time to get into trading cryptocurrencies. So think long-term and you'll create long-term gains in your life, in your businesses, and your finances. So today is, like I said, on cryptocurrencies, tokens and coins, and I'm going to pass it over to today's host, Mr. Joel Clelland.
Thanks, Aaron. Appreciate that setup. Welcome, everybody. And as Aaron kind of highlighted, this is very high level. We're all learning together. It's an adventure. And understanding Web3, you don't get it all at once. And understand that today's presentation, you might feel like you're in front of a fire hose. So just kind of sit back, kind of take it in and understand that we will have time for questions at the end. But if you do have questions along the way, like Aaron mentioned, you might forget if you don't write it down, go ahead and just drop those in the chat. And at the end, we'll try to hit those. And with that, this is part 2 of how to win the future, an exploration of the third generation of the internet, the properties of digital money, tokens, and coins. And I also like one of the other things that Aaron mentioned is that look at this as a long game. Crypto is a new asset class, and I want you to be thinking about it that way. Think about it as a new form of money, a new asset class, and where you might not have all your eggs in one basket with traditional planning. If you're adding crypto, just think about it like another basket. I want to thank Alan Rodriguez for putting this Web3 series together. Thank you, Alan, for including me. It's an honor to be here. And with that, we'll get right into it. I'm Joel Clelland, and I'm the CEO of Centric Protocol. We are a cryptocurrency project. I'm also a member of the board of directors at Centric Foundation. We have a 2-token blockchain protocol that's focused on payment integration. And our vision is to stabilize price in crypto and become a global borderless currency. Part of our DNA is that we don't believe that money should have a face. Money is for the people. I'm an educator and financial professional by trade. And it's interesting, Aaron, I was really tying into what you were saying earlier. There's a lot of things happening very fast and rapid growth in Web3. And just in the last 3 years, I've gone from garden variety investor who wasn't working in tech to being the CEO of a crypto project. So things do move pretty fast when you're open to learning. One of the things that's interesting about my background with Centric is, like I said, I started out as an investor. I was investing in various cryptocurrencies. I came across Centric and I thought I'd found something really unique. And so I started investing in Centric. And then I got connected with the team. I was having conversations with them. And because of my background in philanthropy, I thought that they were hiring me to be an outside consultant to help Centric with its charity work. But after a number of conversations, I found that they were looking for a new CEO. And here we are. Large companies and venture cap firms are already investing huge sums of money in Web3. And these innovations have garnered an incredible amount of attention, both good and bad news over the last few years, but we're still very early in the evolution of Web3. And I always like to think about Web1 like the first iteration of the internet. For those of you who are around back then and paying attention, you probably remember the naysayers. What is this thing, this worldwide interwebs? This thing's not going to take off. And we remember what happened there. And maybe it was just electronic mail and virtual bulletin boards for a period of time, but we know where the internet went from there. Web 2, obviously, big tech companies like Google and Facebook were transacting in our data and our preferences. We were largely out of the mix there. We were the commodity. Our preferences are the commodity in Web 2. And then Web 3, in a sense, we're taking the power back. Adoption can take time, but it can also pick up speed very quickly. Bank of America sees no crypto winter as both user adoption and developer activity continues with rapid growth. Based on my experience as both a garden variety crypto investor and now as a crypto executive, it's anybody's guess how fast or slow adoption will be. But one thing is for sure, the world is ripe for a major influx of volume into the space. And with institutional investors already increasing their positions, it's not too late for the retail investors. I hear that a lot. There are so many people that come up to me and they feel like, Joel, I'm too late. I'm too late for crypto. I feel like I missed it. No, you're still very early. And the number one thing you can do is do your own due diligence, do your own research, and don't take anybody's word for it. In Web3, it's all about personal responsibility. Web3 is a simple label that we apply to a set of emerging technologies that will disrupt existing institutions and governance frameworks. DeFi, or decentralized finance, is huge. Real financial transactions on the blockchain without assistance from banks or governments. Dual economic models, physical and digital assets. This is really something to kind of be paying attention to, that in this Web3 era, there are going to be virtual assets as well as physical assets. And sometimes they're joined together, where you would own a virtual asset, but you'd also own something in the real world. All right, I don't know how many Twitter users we have out there, but I'm big on Twitter. I spend quite a bit of time on Twitter. If you want to track what's happening in crypto, you should get on Twitter. It's a great resource for that. At CNR Burner said that some people think Centric is too good to be true, and he's talking about our company. They must realize #crypto is a new way of doing money. As I said at the outset, I'm the CEO for Centric Protocol, and we're a global cryptocurrency project. We've got over 57,000 users globally and growing. And we have one token that's traded on exchanges and another token that is in network and provides hourly yields to the users. And I'm going to get into that a little bit more, but understand that the purpose of this webinar today is more to give you a 50,000 foot view of the whole space. And with thousands and thousands of cryptocurrency projects out there, we're not just going to talk about Centric, but obviously that's my wheelhouse because that's where I work. Hello. All right. So I responded to @CNR Burner with this, a new way of doing money. I agree. Community is also very important in crypto. And I'm glad that's one of the 3 C's we brought up earlier in the show, community. Communities have their own identities. They form around common beliefs, goals, worldviews, and even causes. Everyone needs and uses money in life, in communities. So money is in the mix too. This slide is actually taken from one of our decks at Centric, and it kind of features the 2 tokens that we have. On the green one on the left, that's Centric Swap CNS. And for the crypto traders or crypto investors, if you go out to exchanges, you can find CNS. Why can't you find Centric Rise CNR, the blue one? Because it's not designed to be traded. It's designed to be transacted within the network. It's also our store of value. But these 2 tokens together make up Centric protocol. And some things that I think will be helpful is, number one is understand crypto. Understand what it is. It's a digital money. Okay. It's digital money held in a digital wallet. Understand price volatility being a real challenge to adoption. If these cryptocurrencies really want to be currencies, they got to have some stability in the mix. And so we're going to talk about that a little bit later on. But understand price volatility being a real challenge when it comes to adoption. Centric is a payment network, and our 2 tokens, Centric Rise and Centric Swap, make up the 2 tokens of the protocol. Again, for investors, CNS is available on a number of exchanges and swaps. But most users, once they understand the protocol, and you can find out about it at centric.com, they want to convert to Centric Rise CNR for those hourly yields. Something that's unique about Centric, and this is something I knew just as an investor coming in when I saw this, is that it's very similar to staking, for those of you that understand what staking is, but there's no lockups. Users can move in and out of the network on demand. The main value of Centric is that we're developing what's called a synthetic stable coin. And the synthetic stable coin, what is that? Basically, we have a clear path to consensus. Centric Swap CNS, the green one, is designed to eventually stabilize at $1. All CNS tokens are actually, that's what their design is in the protocol, is to be electronic dollars, basically. But where traditional stable coins, and this is one of the types of cryptocurrencies that you'll learn about, Bitcoin and all the cryptocurrencies, and then traditional stable coins like Tether, USDC, Daicoin, some of those, is they're actually electronic dollars. $1 is put into an account, and then out is issued a stable coin, a traditional stable coin. Now, it's not always electronic dollars. Sometimes it's dollars or dollar equivalents. These traditional stable coins might be backed by other cryptos or something else that has value. Okay. I see them very similar to fiat. But who really likes stable coins, the traditional stable coins? Traders and people who are transacting in crypto all day long. Because when you're transacting in any type of money, you don't want the value to go up or down during the transaction, right? Okay. And then for traders, when they're in between trades, they also don't want their volume to go up or down during that midpoint when they're in between trades. So traditional stable coins have their purpose. But what makes Centric unique, and what are we talking about when we say synthetic stable coin, is that the Centric concept is really untethered from the US dollar. We use the USD just as a measuring stick at Centric, but really it's going to be fully valued by the market and fully valued by the community. What are the 6 fundamentals of a solid currency? This isn't just crypto. This is any money. 1 is that it could be a medium of exchange. You can transact with it. 2 is a measure of value. You know, this bucket of goods or these, goods and services are worth X number of this type of money, right? A store of value, a basis of credit, a unit of account, and then a standard of postponed payments. Some of you on the call might remember the term layaway. Basically, money needs to serve 6 different purposes. And we believe that Centric Rise, the blue token, when CNS has reached $1, will have fulfilled all 6 of these characteristics of money. Aaron said, think long-term at the beginning. I'm going to echo that. Think long-term. Where will crypto be integrated in your industry? Will it be integrated at all? Some say invest only what you can afford to lose. I say invest an amount that won't have you checking the charts every day. Okay, because that'll drive you crazy. This isn't financial advice, it's just my opinion. What does an economy of ideas look like in your industry? Be creative, try different things, read, learn, get in the conversation. If there's a Web3 or crypto meeting in your town, consider attending. You'll learn a lot, because those meetups, they normally are made up of people that are really into learning, and crypto is piece of that. All right, let's skip ahead. All right, so today's webinar is going to focus on answering these 3 questions. What is this thing called crypto? Where did it come from? And what does it have to do with Web3? Things are going paperless in our world. It's still going to be a period of time before all paper money becomes obsolete, but understand that our financial world is changing, and with it, the money supply. Consider this. In January 2020, the US Federal Reserve had around $4 trillion. Okay, that's with a T. Around 40% of the US dollars in existence were printed during that 12-month period. Fast forward to the end of 2021. The Fed had accelerated money printing, bringing it to nearly 80% of all US dollars in existence. And this part is taken from data taken from December 27th, 2021, just a couple months ago. 80% of all the US dollars in existence were printed in the last 22 months. This printing can't be good for value, can it? Some of you may have seen this infographic. It was taken from the American Enterprise Institute back in December of 2017. And it's not to scare us, but it's to give us something to think about, right? The value of the US dollar has lost more than 96% of its purchasing power since the creation of the Federal Reserve in 1913. Consumer prices have gone up more than 24 times since 1913, meaning that a $1 bill from 1913 would have less than 4 cents of purchasing power today. This is fiat, okay? We said that crypto is digital cash or digital money, traded on digital crypto exchanges, kept in digital wallets. Sometimes they're kept in hot wallets that are compatible with the crypto coins or tokens that we hold. And users can even store crypto offline in what we call cold storage or hardware wallets. You can actually, some hardware wallets are the size of a thumb drive or a PDA or cell phone. I know a number of people that actually have dedicated laptops. And what they do, those laptops only access the internet for 2 things. 1, to download crypto, and to upload crypto. Otherwise, those dedicated laptops are their cold storage device for their cryptocurrency. They keep it safe. Some people I know have like 12 or 13 different laptops just for their crypto. All right, so we've got CBDCs on there. Some of you may have heard of these, central bank digital currencies. This is not really in the spirit of crypto or decentralization. Because this is the government issuing a digital money. Remember, crypto is money without a third-party intermediary. And when we talk about Bitcoin in a couple of minutes, we're going to be really dissecting what that means. Money without a third-party intermediary. But you can send any amount of money around the world with no roadblocks, no waiting, no exorbitant fees. For a lot of people and businesses, crypto is the way to go. It's not perfect, but by and large, crypto is still in its infancy. And many of us see the opportunities here. As we explore and deep dive into crypto, I want us to remember some things. This is a reminder from the first episode, for those of you that missed it. We talked about blockchain being a distributed ledger, or like Alan put it, a spreadsheet in the sky. Okay. Normally open source and available to everyone in the network. That's why shutting down blockchains and therefore crypto, or which is the currency of the blockchain, is very challenging. It would be hard for governments to shut down crypto because they would have to shut down the internet. What is a smart contract? You hear talk about smart contracts quite a bit. A smart contract is a computer program or transaction protocol which is intended to automatically execute, control, or document legally relevant events and actions according to the terms of a contract or agreement. It's basically a self-regulating computer program, okay, that's activated when certain conditions arise. Many, if not most, cryptocurrencies are actually smart contracts. In fact, my company, Centric, we started as a smart contract on the Ethereum blockchain. Okay. Over our 4-year journey, we moved to the Tron blockchain, and then we moved to the Binance Smart Chain, where we currently are. And both of our tokens, freely traded, fully decentralized, are tokens of the Binance Smart Chain. Token supply. You see the word deflationary right there in the middle of the page, and unlimited. Those are the types of supply, the two types of supply that are referenced to different cryptocurrencies. Bitcoin, for instance, has 21 million total deflationary supply of Bitcoin total ever, forever, all the way out to 2040, which is, well over 100 years from now. There's never going to be more Bitcoin than 21 million Bitcoin. So that would be a deflationary supply. Some of these projects are able to mint more tokens or coins all the time. And Centric would be more like the Bitcoin, because our supply is deflationary. We started out with 1 billion Centric Rise tokens at the beginning of 2020. We're down to around 870 some odd million tokens now, and it's shrinking. Okay. And as it becomes more scarce, the value of Centric Rise continues to go up. Okay. Token burning. What is that? A lot of times people think they picture like a bunch of coins somewhere, burning, like molten coins. That's not actually what it is. What token burning is it's a way to manage the supply of a cryptocurrency. And basically what happens is some portion of the tokens or coins are taken out of circulation. And sometimes it's by the users, sometimes it's by the company that produced the cryptocurrency, and then it's sent to a burn wallet. Sometimes we call it a dead wallet. And once the coins and tokens are sent to that wallet, they're no longer usable. So they're basically permanently pulled out of circulation. That's what token burning is. And how is that helpful? Because as things become more scarce, obviously the crypto becomes more valuable. Okay, enter Bitcoin. Were there any digital assets before Bitcoin? Well, they probably wouldn't have been called cryptos, but there's 3 of mention. And the first one was DigiCash. And DigiCash was started by David Chaum. David Chaum actually wrote a white paper, an academic paper back in 1982. So, I mean, a long time ago. Like, was that 40 years ago? Yeah, it's a long time ago. So 40 years ago, there was already people talking about this digital money. Okay. And DigiCash had 2 elements that are common to Bitcoin and all the other cryptos. One is that the users are anonymous. So people don't know who's transacting with who, and all of the transactions are transparent. Okay. And so those 2 elements were the same with David Chaum's DigiCash. It never took off though. Of the other 2, eGold probably got the most traction. eGold actually kind of was rocking and rolling for about 10 years, and then finally it crashed and burned. But from 1996 to 2006, eGold had a pretty vibrant network. Everybody was transacting this thing they called eGold, right? But it was really like a digital currency backed by gold or backed by the network, right? And I think at its height, they were transacting about $2 billion of eGold back and forth. So, but that's, again, another digital currency before Bitcoin that was defunct. And then the other one that has probably the most relation to Bitcoin is Hashcash. Hashcash was developed and put in play by Adam Back in 1997. And what Hashcash was trying to do was it was trying to cut down on email spam and denial of service attacks. So basically like to try to cut down on cyber attacks. But the thing is it wasn't actually successful in doing either one of those. Okay, but you can look those up. All right. See if there's anything else I wanted to share on this one. The cool thing about this process, you guys, is there's just so much information. And you could actually spend probably 40 hours a week for 4 years and you wouldn't get all of it. There's just so much information. So when I recommended earlier, you know, joining groups that talk about Web3, talk about crypto, talk about blockchain, things like that. Maybe there's a local metaverse group that meets, consider attending if you're curious. And one of the things that has always helped me be successful in life is my curiosity. Okay. So Bitcoin, obviously it's the biggest coin in the world on the cryptocurrency side. It actually hit over $1 trillion market cap and then came back down a little bit. But the white paper was written by someone professing to be Satoshi Nakamoto. It might've been a person or group of people. We're still not sure. So the people that put out the paper, a nine-page white paper, came out on Halloween 2008. You can look it up, bitcoin.org. And it's available everywhere. But I am a big fan of reading crypto white papers. If you want to be a discerning investor in the crypto space, number one, you want to find projects that have an official website. Two is that you want to find projects that actually have their crypto traded on exchanges. And then three, as you dissect that website, you want to get into their white paper. You want to see what their vision is, where they're going. What are they trying to solve? What real world use cases are they trying to tackle? Are they already integrated? Okay, so those are things that I would look at. Bitcoin 1.0 rolled out on January 3rd, 2009. Many of us are invested in Bitcoin to one degree or another. And fast forward to where we are today, Bitcoin actually has a bigger market cap than Walmart. Like I said, Bitcoin hit $1 trillion market cap. It came back down a little, right? It's like $890 billion market cap for Bitcoin, something like that. You can go to coinmarketcap.com or coingecko.com. You can even do like Google Finance or Yahoo Finance. And you can find out what the market cap of Bitcoin is. Walmart, I got two different figures for Walmart. One was Walmart at 377 billion, and then Forbes had them at 523 billion. I'm not sure which one is correct, but both are less than what Bitcoin is trading at. All right, so this is the last part of Bitcoin that I'm going to touch on today, and then we're going to go through a couple more quick things, and then we'll get to Q&A. What this model shows you, and this is actually taken from page 6 of the Bitcoin white paper. This actually shows you exactly how money flows, okay? How it's set up for transactions. And the one on the top, we see the traditional system, right? We got the people, the users there on the left, identities, their transaction. Transaction goes through some sort of a banking institution, right? Before it gets to the person getting the payment, okay? What is unique to crypto and Bitcoin? The third-party intermediary, the trusted third party is being removed from the mix, okay? It's peer-to-peer. Right? So identities, you see that line right there on the new privacy model? We're still anonymous. Okay. That line right there is basically saying, hey, you can't see who I am. I'm anonymous. But what is transparent, what is public for everybody to see are the transactions. Okay. And so the nice thing about this is blockchain explorers are an excellent place. And this is another thing you can see on official crypto websites is you look for their blockchain explorer, okay, or their mainnet information, and you can see all the data that's transacting in that network right there, plain as day. Okay. You just don't know who is transacting. That's the thing. So there's still that anonymity piece, but it's, but yeah, there we go. All right. So Web3, there's opportunity in the era of Web3. How do we make informed decisions? That's a good question. When it comes to investing in the space, how do we educate ourselves with all this innovation being so rapid? Do we invest in the companies building the tech? Do we invest in crypto? Do we invest in both? Okay, the wonderful thing about this Web3 series is that it's informational. It's a dialogue. In fact, we're actually going to have a clubhouse next week about this particular episode. Okay, so we're going to spend another hour just talking about crypto. So if you don't get your questions answered today, you can get them answered next week on the clubhouse. But it's a conversation between people moving in the sector and those who want to learn more about it and where it's going. Now, based on the forecasting models, the number of crypto users will double in the next 3 to 4 years, and it's going to 5x within the next 10 years. Okay, so remember we said we're pretty early in the space. This is something to be considering as well. Hey, I'm still very early. If I'm an investor, I'm still very early in the space. Okay, so you're about 10 years early. Okay, but even traditional finance is saying this. You know, the big banks are talking about how it's still early. Remember Bank of America earlier in the presentation, there's not going to be any crypto winter. Things are not slowing down. If anything, they're speeding up. But the one thing that we all should speed up is just our education. All right, so 3.9% of the planet's in crypto. That's about 300 million users. A third of those are in India. India is the most, has the most crypto users, but India is not even in the top 10 per capita. The top 10 used to be Ukraine. Ukraine's in the news right now. They used to be number 1 per capita for crypto users. It's now Vietnam. Vietnam's in the number 1 spot. Right below that's Russia. Russia and Ukraine are in the news. They're both big countries for crypto. Then we have Venezuela, Kenya, and then the United States of America. Here in the US, we have over 27 million crypto users. Okay, so not a small group of people. Understand that's per capita. So we're number 5 in the US. I know some of the people on the call might be from other parts of the world. One of the things that came up in one of our early webinars was, is crypto taxable? It depends on the country you're in. And that's, again, additional research you would need to do with your tax professional. Okay, because there are some countries in the world where crypto is actually not even seen as money or an asset. Therefore, it's not taxable. Okay, that's not true of the United States. It is taxable here. Okay, so crypto payment gateways or crypto customers. You see that on the bottom? Obviously, we see this as a new asset class, but it's also a new way to pay. And what is a cryptocurrency payment gateway? It basically enables you to accept digital payments and receive fiat currency in exchange. So you being a business, okay, web shops are seeing, you know, the most influx of crypto customers, but traditional businesses are getting them as well. And basically what these crypto payment gateways are is they allow people who are into crypto customers, air quotes, to pay for their goods and services in crypto, but then the businesses can choose if they want to accept crypto or accept fiat or whatever their local currency is. Okay. Yeah, at Centric, we're integrated with 3 of the cryptocurrency gateways, but there are numerous gateways out there. Okay. All right, so crypto is a new asset class. Like I said, I would probably put it next to like speculative stocks. Understand it's really, really risky. Okay, so if you're someone who's risk averse, you want to be careful looking at crypto, but understand that if your goals include taking on some risk, it's an asset class to take a look at. Okay, crypto payments, obviously that is a concept I brought up in the previous slide. Hashtag take crypto. Okay, and remember that's a whole new growing market. And if for anybody running a business, if your competitors are starting to take crypto customers and you're not, you may be falling behind. And remember, you don't have to take on that speculation. You don't have to take on that risk of the crypto, because once it goes through the payment gateway, you get the US dollar or the euro or whatever your local currency is on the other side. Okay. NFA, that's not financial advice. DYOR is do your own research. Okay. Asset allocation, you probably know what that means, but that's having eggs in different baskets. DCA is dollar cost averaging. So for a lot of people, when they're saving for retirement, saving for another house, whatever they're doing, is sometimes they'll earmark a certain amount of money every month or quarter or year for a specific purpose. That's what dollar cost averaging is in a nutshell. And you can do the same thing with crypto, because cryptos are bought and sold very similar to single share stocks. Okay, very, very similar. And that takes us to the concept blue chip. Okay, most of you know the concept blue chips, right? In traditional stock market investing, these would be like Fortune 500 companies, strong, household names that normally pay a quarterly dividend. But many of us in the space, we also believe that there are blue chip cryptos. Okay. And so, those four that are listed across the top, Bitcoin, Ethereum being the number 2 spot, Binance Coin or BNB, and Solana or SOL. Now understand that this is not set in stone. These are just, most people in the space agree that these are the top 4. If you were investing in the space in cryptocurrency in these tokens. Okay. All right. Obviously the debate rages on. Every investor has different goals and priorities. Understand this is just an overview of how people are investing in crypto. Some buy and hold, some are traders, some are staking where they lock up their tokens for a period of time, kind of like a certificate of deposit and get some interest. Miners, yield farmers, ETFs are actually starting to take off. And this great exchange traded funds, because that's like a traditional investment vehicle, kind of like a mutual fund, only it's traded like a stock, but you wouldn't actually be invested in cryptocurrency directly. You'd just be invested in paper. Okay, that's a paper investment. Okay, and then there's some other things here we could get into. But one of the things I've recommended to people is that if you're new to the space, set up a Coinbase account or a crypto.com account or a Binance account or a Kraken account or something like that. One of the big ones, one of the big crypto exchange accounts. And then, spend $5, $10, $20. I wouldn't spend more than $100, but just kind of start looking at cryptos like you would any new sector. You're learning about real estate. You're going to maybe buy some books on real estate, maybe rent a video or something like that. You can do the same thing in crypto. Okay. And understand that those so-called blue chip cryptos, they're actually easier to move in and out of than traditional stocks in most cases. And there's lots of places out there. Like if you're holding Bitcoin or Ethereum, there's lots of places out there that already accept Bitcoin and Ethereum. Okay. So you can look at it that way. So there's another way to pay. Okay. Traditional finance. I'm going to wrap up with this and then we can go to some questions. A few years ago, Warren Buffett said that Bitcoin is worse than rat poison. Fast forward to today. He and Berkshire Hathaway are selling, well, they actually just sold it off 2 weeks ago, I think, $3 billion of Visa and MasterCard stock. And they invested over $1 billion in a Brazilian Bitcoin bank called Nubank. Interesting. Jamie Dimon and JP Morgan Chase, they set up the first bank branch in the metaverse. So they've got a virtual Chase branch. It's in the Metajuku Mall. It's in the metaverse. JP Morgan bets that the metaverse is going to be a $1 trillion yearly opportunity as Chase becomes the first bank opening in the virtual world. That Chase Bank Lounge features a spiral staircase, a live tiger, and an illuminated portrait of CEO Jamie Dimon. And then Mass Mutual, I actually lived through this. This was right before Christmas 2020. When I saw this, I was like, what the heck? Mass Mutual, this is about a $1 trillion mutual insurance company, a conservative insurance company, putting $100 million into Bitcoin. What the heck? So when I saw that happen before Christmas in 2020, I knew that a shift was happening. I mean, we're in the middle of a major, meteoric transition in the financial industry. And with insurance companies and banks and large investment firms getting into the space, it just makes sense to at least take a look at it, right? Okay. One of the things that was asked for on the first webinar were resources. Obviously, this is being recorded, so you can come back and you can go to this is the 24th slide. So you can go back and look at this. These are 3 books that I recommend for anybody from newbies all the way up to experienced investors. And even people who are already in crypto. Is Crypto Revolution by Aaron Malone and Bryce Paul. They actually have the #1 crypto podcast, the Crypto 101 podcast. So they've got a really cool book, Crypto Revolution. It's great, very accessible, great bathroom book. Blockchain, Bubble Revolution, and the Bitcoin Standard. Those are also, big big helpful resources. Cointelegraph, Decrypt, Real Vision, and Medium. Those 4 websites are probably 4 of the best websites for you to go out and do your own due diligence. Okay. And you get a lot of really good real world, real-time news about crypto. CoinMarketCap and CoinGecko, these measure the crypto markets, the exchanges, all the various cryptos that are traded and things like that. And you get real-time, data on these cryptocurrency projects. It's very similar to like a Google Finance or a Yahoo Finance, something like that, Bloomberg. Okay. And then, obviously we got the social platforms right there. So Twitter, Telegram, Discord, and YouTube, those are the 4 top ones. Reddit is decent, but I gotta be honest with you, I don't really get any advice from Reddit, just personally. That's just my opinion. Exchanges and digital wallets, there's lots of options out there. Most of the exchanges and digital wallets, it doesn't cost you anything to set those up. In fact, I'm going to drop some things in the chat. You can actually set up our native wallet, the native Centric wallet. It's free, secure, super easy to set up, and I'll drop that in the chat when we start Q&A. I would avoid Robinhood and Venmo for the simple reason that neither one of those platforms let you move the crypto. They'll let you buy it on their website, but you have to keep it there. So I don't like that. In this age of decentralization, that's a big centralization point for me right there. There's a few cryptos you can get there that it's okay. But, and actually, for Robinhood specifically here, the numbers, you guys, they're at like 17.3 million users on Robinhood. They're just, it's like 2 months ago, I think they started a 1,000 person pilot project, like a beta test to see if they can maybe allow those 1,000 users the ability to move their crypto out of Robinhood. Okay. So there's lots of options out there for you to be in control of your crypto. You can avoid Robinhood and Venmo. And then number 1 is just personal responsibility. Okay. So understand great uncertainty. This is a highly speculative space. Crypto is very high risk. Okay. Just keep that in mind. But learn as much as you can because there's lots of opportunities out there. Crypto, is it right for you? I don't know. Only you can determine that. But if it is for you or already is, remember that personal responsibility is the key. Okay. And do your own research and keep your crypto safe. And with that, we're going to go to questions.
Hey, Joel, there you go. I want to share a couple things when it comes to personal responsibility real quick, and then we'll open up for Q&A. So personal responsibility, a few things to add to that. None of us on this Zoom, nor will anybody we bring on here be actual financial advisors. Okay. So we'll share with you what we do, but we're not really recommending for you to do it. You need to take your own steps, take personal responsibility for it, make your own choices. We can advise to a degree, but not financially advise, right? Part of due diligence is who you're doing business with. There's been a lot of issues just in the handful of years that I've been involved in crypto where I couldn't figure out who was on the other side of what I was doing, right? I can tell you one thing that I offer with these webinars is everybody who speaks and comes on and speaks will be a coin carrier. Okay, so there's been some due diligence done there, but even coin carriers still make mistakes and don't know all the info and stuff. But I want you guys to understand that that's something that I have committed to make sure that all of the facilitators and speakers are going to be coin carriers. And then another part of personal responsibility is just learning what's real and what's not. There's what I call junk thoughts going around in the collective consciousness, meaning people say things, they believe in things, but they have no origin for it. They might not even remember where they heard it the first time, but they all say it. So I'm going to go through 2 of these that I think are extremely important. One for me has been extremely important for people to understand, which I'll come to on the second thing. But the first thing is people are like, can you spend crypto? Can you spend it like real money? I have 3 of, I believe there's 7 different Visa debit cards out there. I have 3 of them where I can go and swipe and spend my crypto anywhere that Visa has taken. Okay. So I don't have to do anything behind the scenes to be able to do it, turn it into cash. It works like cash. It works just like regular money. Okay.
Can I share something on that, Aaron?
Yeah.
And actually, you guys might have heard, I spent like this much time on it, was crypto payment gateways. All of those crypto debit or credit cards, they're all connected to crypto payment gateways. Okay, so whoever you swipe that card with, and like Aaron, I've got crypto credit cards too, is they don't get the crypto. They get paid out in whatever their local currency is. So
yeah, it's very cool. And the next thing, I really want you guys to listen to this because it's one of the most common, what I call junk thoughts that I have heard even now. I thought for some reason by now, like since I've been in it for 5 years or so, that this wouldn't be the common question that comes up, but it is. Everybody asks, which is a junk thought because we've been conditioned to ask it, is this FDIC insured? Okay, has anybody ever heard that term before, FDIC insured? Okay, so people think that that's insurance, which means they feel that it's safe. I want to give you guys the facts about the FDIC that I found out for myself. Go verify them on your own, of course. But when I looked into this, because I was like, why is people always bringing this up? Yeah, I've seen the signs on the bank, but what is the FDIC? What does it mean? So what I found is that, hold on, let me get I want to be literal from what I found rather than talk around it. So from what I found is, let me find it. Give me a second because it's on this note. Okay, FDIC insured. What does that actually mean? Okay, well, you put money in the bank, right? And it's insured in case the bank goes under, right? In case the bank collapses, right? So what do they guarantee? They guarantee 10 cents on the dollar. Okay, 10 cents on the dollar. So if you got $100 in there and the bank collapses, you get $10. So is it really safe? Is it really insured? Well, you ask yourself that question. Now, it is designed to be able to basically insure two mid-sized banks if they went down together. If they both collapsed within the same period of time, there would be enough money in the FDIC to pay out 10 cents on the dollar of two medium-sized banks. So what if a third one goes down close to that? If a third one goes down and your money is in the third bank, you get issued stock equal to 10 cents on the dollar of how much money you have in there. And you've just been issued stock on a failing bank.
Can I share something, Aaron, about that
Please,
too?
Joel. Yeah.
I didn't share this on the Clubhouse, but who gets paid out first when any company goes belly up? The bondholders. So that stock, you don't get paid out until the bondholders get paid. So it's just bad.
Yeah. So to answer Max's question, yes, based on how many people are typically in a mid-sized bank, but they're insured at 10 cents on the dollar up to 250 grand.
Yeah, it's
really
painful, isn't it? It's painful.
It's interesting
so
when you learn that stuff.
I used to work on Wall Street and did not even know that.
Yeah,
I
most people
just
don't.
knew that it was 250,000, but I did not know it was 10 cents on the dollar up to 250,000.
Yep.
Yeah, correct.
Well,
Of a mid-sized bank. So if it's a larger bank and there's two of them that go down, it's less. It's going to be different.
And Aaron, we got a few minutes left. You don't mind if I hit a couple of these questions, do you?
No, let's do it. I just want to
Okay.
share those two things because
those are golden. Let's crush popular myths, people. There's lots of popular myths out there. Anna, you had a question, and I want to make sure I understood it about DigiCash and Gold Cash, or why did they crash? Is that the question?
Yeah, I just want to know what they learned from the initial.
Right. So I would say that number one, like obviously we know what happened with Hashcash. It just didn't work. With DigiCash and Gold Cash, there just wasn't any adoption. Okay. It's like that period of time and the evolution of money, we just weren't ready for it. Okay.
No demand for that.
Yeah. I mean, obviously eGold was a little more successful because they had about a 10-year run. But what ended up happening with them is what happens with a lot of these new monies is financial and legal troubles.
If I could jump in, Anna, I actually researched it while you asked that question. I was like typing away, kind of looking at it. And it's interesting because DigiCash was for profit, which seems ludicrous today. That would never fly, right? And so I think what you asking, what do they learn? I think is reflected in what we see successful today, which is that we see a lot more nonprofit-led protocols and initiatives, and we see community adoption. And it's almost like you build the community first, and then you build something technology that serves it. These groups try to build the technology without the community,
right? Potentially,
the way Joel said, even more before anyone was even ready for it, too. So the idea is, it's interesting. These ideas go back a long way. It takes people trying them out and learning. And I would say that these early attempts, they had inadequate technology, they had inadequate community, and they governed it inappropriately. And those are the three factors that are evolving with all these emergent new protocols and blockchains and projects.
Mhm.
It's competition of different algorithmic assemblies that produce different capabilities or features or benefits, but they also have downsides. So it's like a trade-off. And then they have a governance model that they're always sort of, groups will leave one effort and they'll go and join another one because they feel like the governance of the new one will be better than the old one. So it's interesting that you asked that question, because the themes we see playing out today in a more acute way, there's evidence of people having learned from these earlier projects. So,
Mhm. And Alan, I that was something that I didn't like initially see when Anna, when you asked that question. And I'm glad you brought that up, Alan, because if you look at these companies, these protocols, most of them, their websites are .orgs. Centric, in fact, we went from being a centralized project for 2 years to being fully decentralized for the last 2 years. And right now, it's like our hands are off. What is Centric Foundation? We're like the promotional wing for Centric. That's really what it is. I mean, we've got a handful of devs that step in when, something needs tweaking, but for the most part, it's fully decentralized. Anybody can access Centric.
and to parallel Joel on our side, when we were working on this idea of attaching contracts to data as it moves, and we had patents, and we realized this could interoperate with blockchains. I had investors a year ago that were laughing at me when I told them I was putting the IP into a nonprofit. That was like a non-starter, and that was so new, people just rejected it outright. But it's essential to set up the governance for these things so that they're truly community-led and community-owned. Otherwise, you won't build a community. Otherwise, you won't have anything.
Mm-hmm.
That's what we've learned from these earlier efforts, and that's why Aaron. We were talking about that literally before the call started, and that's why Aaron mentioned community is the output of these efforts. So.
Mm-hmm. Yep. Thank you, Alan. That's great.
Yeah.
Ryan, I know you didn't really ask a question. You made more of a statement about Hawaii. It's interesting because there's about 9 countries globally. That's it, 9, where there's an outright ban on crypto. And half of those countries, they've got hundreds of thousands of crypto users. So people in the name of liberty and freedom will always find a way, right? Now, that said, different jurisdictions are going to be more or less friendly to crypto. It's interesting because a VPN, when used appropriately, can help navigate a lot of things for people. But I can't promote VPNs. I just say that, hey, there's some tech out there that might be able to help you.
Yeah, that's the is it a human, and is the human you think it is?
Right.
It seems to be a perpetually unsolvable problem. So,
yeah.
Although
the world
yeah.
is getting smaller. The world is
Yeah.
getting smaller.
Yeah.
Looks like Max has a question.
Yeah, question. Thanks, Aaron. Because I just did, while you were saying that there are some countries that don't tax, or they have minimal tax, or they have unique tax.
Mm-hmm.
I did a quick search on which countries are there. Are a few of them in Europe. Malta being supposedly one of the cryptocurrency capitals.
Mm-hmm.
If I have a crypto account in Malta, and I live in, I don't know, a country that, even though I'm an American, I live in a country that, I'm not an American, but I live in a country that has iffy crypto tax. Is it? I mean, I'm not asking for advice here, financial advice, but I'm just wondering, do they still, or do you still get hit? Would I still get hit as an American? Because I have to disclose that, right? So it doesn't matter where I'm living or where I have my cryptocurrency. As an American, I'm going to get hit for taxes, right?
If you're an American, yeah,
Yeah.
I mean, America loves repatriating dollars.
Right.
They love bringing the dollars back, no matter where you live. But that's definitely an answer that we can't answer for you. My recommendation is to get good tax advice on something like that, because there are a lot of different ways to keep your crypto away from, the tax authorities.
Right.
But at the end of the day, are these large exchanges going to do all the reporting for you? No, they'll do some of it. But yeah, that's a hard one. That's a hard one for us to answer on this call, Max.
It's just to put you in a direction though, Max, dual citizenship and or residency can be a potential solution to that problem.
Because Portugal has good crypto
Oh,
laws.
Portugal's
And
great. Yeah,
Portugal's
Portugal's
an
one of my
easy-
favorites.
Portugal is an easy place to get a dual passport, and you don't have to be Portuguese.
And the people are sweethearts too. So
So I hear, and they have
They're
nice
wonderful.
weather year round.
I've also heard that there's some countries where you can buy your residency.
Right.
Just a rumor out there. So
That is actually quite true. I know that for a fact. It's not a rumor. It's a fact.
I know it for a fact too. I'm just.
I want to thank everybody again for coming to the webinar today.
Agreed.
Hey, this was good.
We're at the
I
hour
learned some
mark.
stuff too.
We're at the hour mark, but we'll stay on here for a couple more minutes just because I have 2 questions or 1 question for Joel that'll be recorded, or you guys can stay. But Joel, can you share with us how people can get in, or people can, or why they would get involved with Centric as a business owner, as well as what it would look like to get involved with Centric as just a person to invest in?
As
what's
just
in-
like a traditional garden variety investor.
Yeah, yeah.
So I kind of answered that second question a little bit during the presentation, but most people like the concept of passive income, and passive income is probably one of the most popular things in the Centric community, because just by holding our second token, you get hourly yields. So your Centric holdings go up every single hour just by holding Centric Rise. So that's kind of nice. That's what got me into the protocol originally as an investor. For businesses that want to attract those crypto customers, hashtag crypto customers, they can integrate with those payment gateways. Like Aaron was saying, there's crypto credit cards, but you can also set up whether you're e-com or traditional business, these crypto payment gateways, so you can attract that customer base that wants to pay in crypto. And maybe you want to keep the crypto, maybe you don't. We've got about almost 24 companies that accept Centric, and they're all integrated with the payment gateways. A handful of them are holding Centric on their balance sheets, but a lot of them, they're just using it as another way for people to pay. So as a business owner, can you hold your reserves in Centric? There are a number of businesses that are, but you can also just, allow your customers to pay with it. And the cool thing about our team, our sales team, when they integrate a company for crypto payments, you're getting integrated with all the big cryptos that people can pay with. So like your Bitcoin and your Ethereum and your Dogecoin, all of those will be integrated with the payment gateways we use. And so like business owners that aren't already accepting crypto at Centric, you get your questions answered. If you decide you want to integrate and start attracting that customer base, we can help you with that. And then are you just able to take Centric? No, you can take all the big ones.
So Joel, just to tag on a question that for me. So as a business owner, if I chose to take Centric,
Mhm.
right, as payment,
Mhm.
it comes in as CNS, correct?
Correct.
And
It
if
comes
I
in as the
wanted
traded
to, I
token.
could convert it to CNR and get hourly yields on the money I just took in until I
Correct.
decided to put it into cash. or
Correct.
US dollar.
100%. Yeah, you hit the nail right on the head.
I
And
think we're
there's,
gonna
like
set
I
me
said,
up
there's
for
five or six of our companies that do that.
I think we're going to set that up. For
Yeah,
I
it's
like
cool,
that
right?
idea a lot.
And then the nice thing is that for people who are still kind of like, well, I'm still kind of tentative of the space. My own personal planning outside my business is pretty conservative. I don't want to add crypto to my asset allocation. You can still attract that customer base and get paid out in the US dollar, or like I said, the euro, or wherever you're located, the peso. Okay.
Awesome. That was my question. So we can wrap it up unless
Business
Alan has
requirements
something
to have Centric. No, there are no business requirements.
I'll take the very last question. Chris, where? Yeah, Paulette, you asked about a page. So we just sent out an email. We're getting kind of our gears in place with all the communication and administration of this. But yeah, it occurred to me that we need a web page with all of the webinars in one place. So we'll be setting that up, and there will be, of course, everyone will get a follow-up email. Anyone that's attended any of these sessions will get a follow-up email from me, and I'll have that link in every one of those emails. So,
And we'll have a clubhouse next week.
that's right. And then at the same time, right, guys? Same time.
10
So-
10 a.m.
Oh,
Central.
it's morning. Okay.
Yeah, this
But
morning.
it's Thursday, right?
Yep.
So
just to recap on that for everybody, and everybody watches the recording. Every other Thursday, we have this webinar at 3:30 p.m. Central Time. And every other Thursday, opposite to these Thursdays, we have a clubhouse at 10 a.m. in the morning Central Time, which will be in conjunction with this webinar. So next week's Thursday clubhouse, we'll dive into this a little bit further, answer all the questions and all that good stuff.
Yeah, because sometimes questions pop up after we wrap up the meeting. You're like, oh, why didn't I get a chance to ask that? Oh, you can ask it on the clubhouse. And we may have another social platform. We're talking about it where we can do Q&A throughout the week. So we're talking about it.
That's all we have for today, folks.
thanks, everyone.
Thanks for
Thanks,
attending,
everybody.
everybody.
Awesome, guys. Thanks.
You bet. We'll see y'all soon.
See you
Thank you
next
very much.
Thursday.
It was great.
Have a good one.
Bye.
Bye.
Bye-bye.
Thanks, Aaron.
Yep. Just saving the chat here real quick. Oh, I actually have a question for you, Joel, if you could stay for a second so I don't
Sure.
forget to do this. Authorize. I might still have a question. We'll find out in a minute. Continue
Yeah, I love this mic because I can do the voice of God with this thing.
the voice of God.
God.
Okay. Let me go back to where I was. Let me check my email. And I went to set up the wallet and it wants me to verify my email, but the email never came through.
Oh, interesting.
Oh,
You know
no, it
what?
doesn't give me an option to redo it.
You can also try, let me try this one.
Unless I just want to try it again.
You could do that as well. You might want to check your spam.
Oh, hey, there's an idea.
And then if that doesn't work, try taking off the sign up at the end of the last
Not my
/
slash. It's not my
See,
spam.
I just
Try
dropped that in
taking
the
off
chat.
what? Oh, taking off
Here
sign
it is.
up.
Yeah, you can go to wallet.centric.com without the sign up on it
Mhm.
and click on new account. I just dropped it in the chat.
Got it. Perfect. Cool.
Yeah.
That'll work.